Tom Karsten. Thanks for joining me for this brief market video. I just wanted to share my thoughts on where the market is right now and what we're doing about it in most client accounts. Clearly, the U.S. markets have been on a strong rally for several months, but it has faltered a little bit lately. The biggest question I've been getting from most clients is, what is driving this rally? And my belief is that the answer to that is the expectation of tax reform, certainly at the personal level, but mostly at the corporate level. If we do get some corporate tax reform, we would see lower corporate tax rates, and those savings would drop to the bottom line of companies, making them more profitable and therefore more valuable. I think there's also anticipation that any corporate tax reform may include provisions which would make it easier for companies to bring back profits and cash from foreign countries back into the United States. Profits and cash that in most cases would be used to repurchase company shares, once again providing a positive indicator for stocks. But over the last week or two, we've seen the market falter a bit with all of the indices off of their market highs. And I think the speculation is that the Republicans are having a harder time getting the healthcare agenda through Congress, and there's the question of, are they going to be able to get the tax package through Congress as well? So any bump in the road could cause the markets to correct fairly sharply, and that's our anticipation. So what we're doing about it in client accounts is that we've sold 3 stocks so far this year: Fastenal, Paychex, and IBM, all at profits. Profits which we've only used at this point to reinvest into one stock, which is Amgen, which was trading at a significantly better valuation. The remainder of the money has been building up in cash, and so across all client accounts, the average cash balance is approximately 12%, higher than where we would typically keep it. We believe we'll do one of 2 things in the near future. One is that if we do see a pullback in the equity markets, we'll use that cash to take advantage of any pullbacks in some stocks we'd like to take positions in and get that money reinvested. If we don't see a significant pullback, we are seeing higher interest rates in the fixed income and bond markets, and we'll likely redeploy that capital in some better opportunities in bonds. Lastly, this month of March, we are making some changes to our fixed income allocation in most of our managed accounts. For some time, we've been using 2 separate Vanguard funds for our fixed income allocation, and we're selling both of those and purchasing the Guggenheim Total Return Fund. We're doing that for 2 primary reasons. One is to reduce costs for clients in the accounts, and the second is because of performance. So you'll likely see those changes on your March statement as well. As always, each portfolio is managed for the specific needs of each client, and so your account may have more or less cash than what I've indicated and may be positioned a little bit differently depending on your specific needs. As always, if you have questions about your portfolio, or if you've encountered some changes in your life and need to talk about some financial planning issues, please feel free to call our office, and one of our advisors or staff would be happy to talk with you. Thanks very much for taking the time to view this video, and I hope you have a great day.